There's a whole lot. There's a whole lot that goes into it as far as using all these bits of information, but just two of the ones that I want you guys to keep an eye on. As I mentioned, huge nugget for me as far as one that we've been tracking in our live trading sessions already is Mondays have been extremely elevated risk, with people working at the institutions just coming back and setting up their order flow. So that's where we typically see Mondays being inside days and getting that choppy action. Also knowing, again, inside day, and then looking at, we did have an economic report coming out at 10 a.m. Eastern time. Typically, with economic reports, we can see a bit of volatility in the markets. So make sure you're keeping an eye on different reports that are coming out, as we can expect some volatility in the markets. So a lot of different odds enhancers we're looking at. And then again, going back to the news, a lot of bearish news. Overall, if the media is portraying one thing, like a whole lot of bearishness, the markets are rolling over, don't use that as a trade to start placing trades and starting to sell. Use that as an odds enhancer, because the media might be taking one side of the trade and then they're wanting to sell, instill fear in the public, where really they're just trying to push price down to an opportunity where they can buy at. So that's actually what I'm anticipating and was expecting here. Is saw a lot of fear in the news, saw price start to drop, a lot of people selling at this point, and then it actually did drop into one of our buying territories. So a lot of times fear can actually be an opportunity to buy, just understanding how you can use it to your advantage. So again, that's just a quick glimpse for today of the pre-market routine. I'll go into a lot more detail tomorrow and Wednesday. Right now, just want to give you that brief overview, but I'm going to pass it over to Jeff. I know we want to talk about some of the stocks that we've had that have been working, whether you guys trade stocks, futures, Forex, we do all of that. So want to go over some of the trades that have been working already. And so you can see that structure and that format of what we look for to know actually when to buy and when to sell, because it can be complicated, it can seem confusing, and people don't really understand when are the best opportunities to buy and sell. So that's where we want to simplify it for you guys. So Jeff's going to show you some of the stock picks that started going well, and we can take a look at those and see what that picture looks like. So I'm going to switch it back over to Jeff, and then we'll take a look at those. Oh, and then Bertie said, does it only apply to ES? Also good question. No, it does not. But looking at all the indexes, S&P, the NASDAQ, the Russell and Dow, good to see if they're all correlated or not, seeing if they're inside the priorities trading range, just to get a feel of where the markets are going and the overall market conditions. Let me pass it over to Jeff now, and we will continue on with some stock picks. Jeff, I think you're good to go now. I'll stop sharing.
Oh, good. Thank you. Good job. Let me bring our screen back up here. Oops. Almost hit the wrong buttons. A lot of moving parts today. Really excited to be here. A couple of the trading strategies and things that we will be covering throughout our live trading. Okay, and today again is just more of that introduction. Tomorrow and Wednesday, you're going to see our full-blown get to work type zones, pre-market routine, as Kaitlyn was describing. What we also will be incorporating into all of our live trading rooms is we'll be incorporating various trading strategies through our live trading sessions today going forward. Okay, now today we're not going to get into the teaching part. We're just kind of showcasing everything here. And we do have some live market action coming up. But for the most part, we're inside the prior day's trading range. So it kind of timed this just right to be able to have the flexibility of taking the time to explain, what is an inside day strategy, outside day strategy, active trading times. There's going to be a whole bunch more that we have to offer. Part of the things that we do offer will be some of our live or some of our stock trading educational trading ideas. How's that? Just going over a couple of them. This was a trade pick that we put out there last week, and this was on SRLP. Now, the software you see that we're using is software called Entry Point, and it's produced by Software Solutions and my mentor, Skip Higley. Okay, and Skip had put all this together many, many years ago using all the different colors. This is a trend following technique. It is not a supply and demand type trade opportunity, okay? So you're also going to see throughout our live trading rooms that we not only use supply and demand type strategies, we also use trend following techniques. And a lot of times people are not sure what the trend is. So keeping the chart colorful, keeping all the colors on there does allow us to see that what's going behind all the colors. Okay, we have several different algorithms that are running behind that to give us that picture. Now, our stock picks, we provide the stop, we provide the entry, and we provide a short-term target. A second one that we put together was HZNP. Again, this was a trade that was set up on the 22nd, and on the 23rd, price had moved through that, triggered the entry, and then we had the 24th as price continued to move up. And of course, we also have our supply and demand type setups where we're using a very specific group of candles, which I have been teaching for several years, and we call it the leg base technique there. So as we jump out and look at some of the trade setups that are available today, and we do have some existing open positions that we are actively managing and participating in. One of them is the crude oil trade that we've taken, and the crude oil trade was basically taken off of another strategy where we which will be coming out in a short class, which talks about the last trading date, okay? And using the last trade date as a very viable piece of information for some of our longer term traders. Let's just say longer term, like 4, 5, 6 days. How's that? Okay. You'll find that our sessions in the live trading room are not only just for short-term traders, but we do have some longer-term trend following techniques, and that's why we're going into some of these pictures here. So just as a quick review of a couple of the trades, we see we have SQ, which is square. This was a trade that was also set up on the 22nd, and it looks like we had it trigger right there. I'm trying to find the date, 1 second there. Yeah, it triggered right there on the 22nd of July, okay? Now, there are going to be some rules around taking trend following trades. We look for the setup bar. We look to make sure that all of our indicators are leaning in the right direction for that trend. Now, when you're looking at the software, Entry Point, you have to understand what's going on behind the scenes. There's over 32 different indicators, oscillators, and various algorithms that are setting up just simple colors. Now, all we have to do is find the setup bar, wait for price to commit, and then as soon as price breaks above the high of that first candle after the setup bar is where we initiate the trade opportunity, and we go long. As each day passes, we will look to adjust using the stop loss, okay? So we already incorporated into this is a stop loss, and each day that price closes above the setup bar, then we would adjust up to the painted stop. Once the next bar closes above the high, then we adjust up to the next stop. So you will see once the trade activates, the first glance, you're going, oh my gosh, that's a lot of risk on the trade. Well, as soon as the trade activates and then price closes above the prior bar, we start to adjust our stop and we start using the trailing stops to go along with this. And we have several examples that we will be using. Let's see, we got LB, which is another trade. It looks like it's triggering right now this morning. And most of these trades will trigger within 3 days of that setup bar and of course the first candle after that, okay? So longer term positions, and some of these, the trades last very long time. I'm just gonna go over a couple of examples here, and then we have our list of potential candidates that we will be bringing up today, including Forex. And the Forex charts, I did jump down to a smaller increment, and using the market analytics, you can see over here with my radar screen that I cut my work down really, really fast, okay? See, I dropped these down to a 120-minute chart or a 2-hour chart, just for some more intraday type trading, using the same technique as we're showing on a daily chart. We're looking for a place where we can enter following the momentum, a place we can manage the risk. And as soon as today's bar, or sorry, the first 120-minute bar closes, we start adjusting our stop loss up, okay? So let's take a quick look at a couple of our trades that were set up just the last 2-3 days. Well, BMY has triggered. We're still looking for that 7208 area. And we have our protective stop. And as I identified that, I'm not going to do this on each one, but you kind of get the idea that once price did close above, that we start trimming up our stop loss, okay? And we keep adjusting that up as the market continues. Now, once the market stops us out, well, we move on to the next one. We had THS also came out, okay? This was a short trade. Now we noticed that the markets did start to go up, and we always have to remember that 39% of our stocks move is directly correlated to the big indexes, and the indexes were going up. So a large part of our stock move is going up with the indexes. 41% of our stocks move has to deal with the sector and industry. So 39% of our stocks move where we have is correlated to the indexes. 41% of the stocks move correlated to the sector and industry. And in a nutshell, 80% of our stocks move has nothing to do with the stock itself. Now, we can see that down at the bottom here, we have the entry point market trend. Now, that is our large time frame trend. And then we have the main trend, or sorry, this is the main trend of the largest time frame. And then we have the main trend and mid trend, which also show intermediate and small time frame trends going in the same direction. When we have the trend strength index, several different algorithms are here to help us to see when the market is starting to get weak. And that's when we start going from a blue to a magenta color and then to a yellow color, which would be congestion, okay? And then of course our price action bars, these are not candles, but our price action bars, we're also looking for that, confirmation and the color to align up with that, okay? Let's see, HRC, I think we already looked at. That one's underway. Markets are just now opening up. McKesson moving up. And 1 second there. Sorry. Oh,
Hey, Jeff.
There you go.
Hey, you're doing great, but I just want to let everyone know, if you check your emails real quick, I just sent you all out. You know, Jeff's been going through the past stock picks that have been working out really well. But we also want to send you today's picks. So just as a special for you guys for registering, if you did register and you're here, excellent. You're going to be getting not only the stock picks, but also our futures picks and the Forex picks. So you're getting everything that we normally give to our students in the live trading rooms. So check your email if you want to follow along. These are going to be all the trades that we're looking at for the day. And then we'll also give you guys these as well tomorrow and Wednesday. So nice little treat for you guys, couple stocks, Forex futures. So whatever you're trading, hopefully something in there for you. So you can take a look at those as well.
Yeah, thank you, Kaitlyn. I'm going to leave your mic unmute for right now.
Thank you.
As we start to go through this, there's a little PDF, as Kaitlyn just said, is in your email box if you've registered for our class. So today's stock picks for July 26, we have AAP, trend following. Now keep in mind, we just talked about the how the stocks are correlated with the index sector and industry. So inside day, trade a little cautious here, okay? As we start to look at the additional stock picks, okay, APH, and I'm not going to go through all of these, but there are a few that I have some strong interest in. And one of them in the lower part was Qualcomm, and I'll come back and we'll start looking at a couple of those. So check your email box. There's a PDF file in there. There's also at the bottom, I think there's a couple of the smaller time frame ones we did see triggered. So on the FX trades that we had, which, coming back over here, get the right tab. Actually, the one I took today, okay, the one I took today, let's see, where was that one at? Hold on one second. That one was the GBP Aussie dollar. Okay, and we can see that this one is already starting to trend. Okay, somehow I lost a couple of things. So we also just had one that just set up here, which was GBP Sing dollar. Okay, and price has broken above that, just like what we're talking about on the equities products. We're starting to see that the break above, and already we're up on that trade there. We also have the market analytics scanning for everything. So once we have the 0 or the 1 in place, we're then able to step in that. If it already has a 2 behind it, okay, that may not be the one that's working for us. British pound just got a long opportunity on that. Let's take a quick look at that. And we can see now on the British pound that everything is now level 5, and that's what we go with, a level 5 trade moving to the upside. So just to make it a little more visual, I'm going to place where I have my entry, my stop loss, okay, and then we'll use the forecasting tool. And for the forecasting tool, I go to a slight higher time frame. So I'm going to go up to a 480-minute chart. And what I'm looking for is, where is that forecast taking us? Okay, now the forecast is several different, well, it's a couple of different algorithms on here. And the algorithms are using some old techniques from some very well-known traders in the industry. The technique that you're seeing here as the bars are painting to the right side of the chart was developed by Wells Wilder. Okay, now my mentor spent a lot of time with Wells in private training and learning some of these techniques. Okay, so my mentor has been around for a long time and has some really great stories and things like that to share with us. Let's see. All right. Couple of the other ones, CDW, which is on our list. That one has just triggered, going long, 181.84. CBOE just triggered as well. Let's bring AAP. Okay, we're still just slightly below. Boy, markets are moving around here. Take a couple of looks at the other ones. Okay. And wow, NVR, what happened to that one? Okay, well, that's a pretty expensive one. I may only be doing options on that. That one still has not triggered for today. But using this as an example, as we look back and see a few of the other setups that did play out, there were some significant price moves once price did trigger the entry. And immediately after price triggers your entry and price closing above the prior bar, we would adjust our stop loss up quickly to manage our risk. All right. I'm going to pass the mic back over to Miss Kaitlyn here. And I've got to find here, hold on one second. Where did you go in my list? There you are. All right. Passing back over to Miss Kaitlyn.
Thank you, Jeff. Let me share my screen. Yeah, so a good one that I want you guys to look at, and if you were in our live trading session, actually, let me just get the chat up so I can see you guys. Buddy Daniel. Yeah, so you guys might remember this one that we took last week. So as you can see, a couple students from our live trading sessions currently, and gonna remember this setup from last week, really great one. Just wanna show you we're taking on the NASDAQ for one of our buying territories. And this is going to be in the PowerPoint that we sent you. So really looking for where we want to buy at. We want to buy low, sell high, and also take into consideration the trend. So as we've seen, the NASDAQ has been moving to the upside. So again, we're looking to be buying in high quality areas. So in our live trading session, we were able to find this setup here, where as you can see, price dipped into our buying territory, respected it, and then continued with the trend to the upside. So trend is very important. As I mentioned before, the trend is your friend and you want to be trading with it in order to stack the odds in your favor. And you'll see here how there's a certain candle formation. I just want to touch on this a little bit right now as far as what Jeff and I look at to maintain consistency. Very important for your trade plans to have some consistency and methodology of what you look for as far as your zone criteria, your buying, where you're going to be buying, where you're going to be selling, in order to maintain that consistency so you can track your results over time. So on this slide right here, it should be on slide 11 of your decks, it says where we buy and sell. And this might sound extremely basic, but it's, I mean, one of the key concepts that all traders need to understand is where are the highest quality opportunities to buy and where are the highest quality opportunities to sell at. So generally speaking, this is something that Jeff and I teach in some of our other courses, but the buying territories where we're looking to buy at typically is going to have this group of candle formation here. For where we're looking to sell at, typically we'll find this formation here. So as you can see, where we're looking to buy on the NASDAQ, this is that candle formation we were looking for. And you can see that's actually one variation of it here. So what we say is there's a leg candle, a base candle, a leg, and a base. And that's exactly what we had here on the NASDAQ, which allowed us to take this as a buying opportunity, as it's one of our criteria, what we look for when price came back into it, and then continued with the trend to the upside. So wanted to show you guys this one, just a really great trading opportunity so you can see the setup, where we got in, what we're looking for. And again, just really important to stick to the basics, keep things simple as far as what you're looking for in order to stack as many odds in your favor as possible. I'm going to go to the charts real quick. As you can see, S&P respecting our buying opportunity here. And you'll see this one in the deck, as I mentioned, that already triggered actually before the session started, unfortunately. But I'll show you this one as well, as far as how this one worked out and some of the criteria of what we're going to be looking for. I'm not going to do too much teaching today, but I think it's important to understand some of the basics of what we look for and where those high probability opportunities are. So you can see, just looking down into the left, where is the origin of a very strong move? So with these strong moves, we're looking for an imbalance of orders where there's either a ton of buyers that pushes price up or a ton of sellers, and that's why price goes down. So here we could see that there was obviously a ton of buyers because the price had this huge rally to the upside. So looking at the origin of that move for where we're going to find that buying territory criteria and what we look for. So looking here is where we get, again, we found on this 8-minute time frame that criteria of, as I mentioned before, the leg base. That's the criteria we're looking for. And just looking at your odds enhancers to stack them in your favor, seeing that we have a strong move is representing that all throughout here, there were no sellers because price went up, but looking down to find the origin of a move that causes that huge spike to the upside. So that's one of the key things I always say, is looking at the origins of these big moves to find where that imbalance is between the buyers and the sellers. So once you're able to see that imbalance and see where the battle's happening between the buyers trying to step in, the sellers trying to step in, and there's this battle going on until one side takes control, we're able to find where that imbalance is coming into play. So actually looking a little to the left, we can see where there were sellers coming in and they were pushing price down. So just looking right across, you can see sellers were keeping price down actually for a little bit of time. It looks like in the overnight session. Here you can see the times from, looks like 5 o'clock to about 9 o'clock. Price was just going sideways and down until we had this strong move to the upside. So what we're looking for is that imbalance again, where we're seeing sellers stepping in, and then ultimately where are the buyers coming into play and then pushing price up, taking out all the sellers. So it might sound really basic to a lot of you guys if you've been doing this a while, but it's one of these basic concepts that often traders overlook. And it's one of the fundamentals that I can't emphasize enough we need to be looking at, because that's the key criteria we need to see in order to pick our zones. I know Daniel's in the chat and he took this zone, so good job for him as far as this. Getting that picture and understanding, you're able to start implementing it, and then you see your trades start to work out. So as I mentioned, Jeff and I, this is actually one of the courses that we're going to be teaching, is how to identify these specific formations and the zone criteria of where these high probability opportunities are. And once you see them, it becomes a no-brainer time and time again, where you can see it and you can find where that imbalance of orders is happening. So looking up here, we're able to find where the imbalance was on the S&P. We're also going to be looking for, in our live trading sessions, not only where we're looking to buy the dips as price drops into our buying territories, but also take into consideration if there's no more sellers at a certain point, could price potentially keep on rallying? So with the S&P, we know we're in a huge uptrend, and potentially a lot of people are going to be shorting up here. They're going to be picking the top, saying, the market's going to roll over. As I mentioned before, we were taking a look at the news, and a lot of bearish news out there saying the markets are going to be rolling over. So a lot of people right now, especially the novices, could be trying to pick the tops, expecting this market pullback to happen. But always important to understand if there's potentially no more orders there to be filled up. So looking to the left-hand side of the chart a little bit, we can see that price has actually been up here a few times. So just to break it down into what this means is that the institutions were coming in. Once price reached this point here, institutions started stepping in and they got their sell orders filled. Then price came up, they started selling more on the S&P, which pushed price down. Price came back up again, had some more sell orders to get filled, pushed price down again. So this is that area where the institutions have already been before, getting their sell orders filled once, twice, 3 times. So once the institutions have been filling their orders that many times, the likelihood of there still being unfilled orders decreases. So important to look to the left a bit and see how many times have the institutions been filling their orders. If they've been there a while and they've had their orders filled many times before, then your chances start to decline as far as taking that as having some potentially unfilled orders here. So while a lot of traders, novices, whoever might be shorting this point, might actually be better for a breakout opportunity to the upside. And as I mentioned, huge uptrend on the S&P, just taking a step back to the daily chart. You can see we're just having this huge rally to the upside, and whoever's trying to short this market as it keeps going up is getting stopped out. So understanding, trend, another one of those just basic things, but understanding that and tying it into your trading plan can be extremely helpful, just to understand that this is a big trend to the upside. If you're going to be picking tops, trying to sell up here, chances are you could just get squeezed out and the move might continue to the upside. I'll look at questions real quick. Let's see, Kaitlyn, why an 8-minute time frame and not a 5 or 15 as your go-to trading time frame? Very good question, Scott. So hopefully everyone sees his comment. But as you saw, I did have an 8-minute time frame there. So a lot of people ask this, and this is another one of those misconceptions as far as trades need to be on the standard time frames. People have told me they only look at 30-minute, they only look at 15, 10, 5-minute charts, but the institutions don't care as much about time as they do about filling price. So what the picture looks like for us, it's not based off of a time frame, it's actually based off of what the picture looks like. So as you could see here, this was the origin of a strong move up. Time really isn't a factor as much, it's more of getting the right picture. So actually I look at pretty much any time frame. You can see just from my drop down, I go minute by minute sometimes just to find that right candle formation of what Jeff and I look for time and time again for our zones. So important to understand that the time doesn't matter pretty much whatsoever. It's really all about getting the right understanding of where the imbalance of orders is. So looking here, this is where the imbalance was. Again, we saw where the sellers were stepping in, the buyers were below it, and that's what caused price to move to the upside. So with time, that's not something we're necessarily going to be looking at here. We're really just looking for the picture to find where there's those unfilled orders. Let's see, Jeff said we trade the price chart, not news. Yes, good point, exactly. So the news, also important to understand that the news has a objective in many cases where they're trying to put out one perspective of things going on, saying market's crashing, market's rolling over, time to sell. And then they got their buy orders out there waiting to just buy at a lower price. So we need to understand what the news is saying and what's reality are two conflicting bits of information. We can use the news to our advantage because we can see if the news is saying, the markets are pulling back, we need to sell. That's where we can look for, again, our opportunities to buy. Time frame doesn't matter. As I mentioned, looking at an 8-minute time frame right here to find that picture, really all about just understanding where that imbalance of orders is happening, and then using these odds enhancers like the news, like economic reports coming out that can cause volatility. Once there's volatility in the markets, this is what causes people to be afraid. They start anxiously selling or anxiously buying, and that's showing that they're not comfortable with their trading plan, or they don't even have one. So basic important thing to have with your trading plan is just to have criteria of what you look for, what you're going to stick to time and time again, and to not let the volatility instill fear in you. In fact, the volatility is what we can use to our advantage to get better opportunities. for example, if price is extremely volatile for the day and we see a huge rally, but then we have a supply zone up higher, that's going to be a shorting opportunity for us. Also, if there's a lot of volatility and we see price dropping, like it did here on the S&P, probably people panic selling. They're thinking this is the top as they were reading on the news. But in reality, this panic selling just led us into our buying opportunity, and now price is continuing to rally. So look at the news as just an objective piece of information. Don't get emotional with it, because when you get emotional, that's where you're not sticking to your trade plan. And trade plan should be extremely objective with everything, where you're understanding where are the unfilled orders, where the institutions want to buy at. That's where we want to buy at. And then where are their unfilled orders of where they're looking to sell at, because that's where we want to be selling as well. I'm going to go back to the NASDAQ real quick. We could see with the S&P hitting our area right there. And also had this one set up, I found this morning, that got hit as well. You can see once you start to understand the price pattern, what to look for, it starts to become habit. And as Jeff mentioned before, we pretty much have the same zones now and the same buying and selling opportunities. So that's when you know you understand what the price chart is telling you and where there's those unfilled orders. So similar picture here with the NASDAQ. You can see that a whole lot of selling came in here because price had this strong move to the downside. So when price came back up to that area, that's where we'd be looking to sell. So again, keeping it objective, looking at the price charts to find where there's that imbalance of orders where we can look to buy and sell. So NASDAQ was one that I was looking at. S&P was one that I was looking at. And just for newer traders out there that start to dig into the smaller time frames, I know you see here I have a 7-minute zone or 7-minute selling territory. On the S&P, I had an 8-minute buying territory. These seem like smaller time frames, but what I always do is actually start on the higher time frames to understand where we're at, get that big picture perspective of what's going on in the markets. And that way I can understand the risk of a trade. So if you are new and just checking us out for the first time and you're seeing these smaller areas that we're trading, don't get sucked into the smaller ones. Make sure you're staying on the higher time frames first to understand the bigger perspective of what's going on. Here you can see similar with the S&P that if we're trying to sell up here and our trend is having a strong bull market and rally to the upside, anytime we're selling is trying to pretty much take a poke at the top. And that's going to be elevated risk for anyone trying to do so. If you're trying to sell, the institutions know where your stops are. More likely you're going to be getting squeezed out versus actually picking the top of the market. You might get lucky once in a while, but overall you want to be going with the trend, and that's more easily seen on these higher time frames. So hopefully you guys are still looking at the bigger time frames, keeping in mind the overall context of the trading environment, what the trend is. On the bigger time frames, that's where we can see where the institutions are more clearly, the big players that are moving these markets. So you can see the institutions this whole time have just been buying up the markets. So what that means for us, we need to take advantage of our opportunities when we get the pullbacks in the market to buy along with the institutions as the market is continuing to move higher. So NASDAQ there is real. Also looking at the Russell, you can see it here. This is not one that I've been trading as much lately, just because as you can see on the daily chart, pretty much just chopping sideways. This is what a lot of people refer to as the white space, where we're just going sideways. And again, elevated risk, because this is where the institutions have been filling their orders many times. Price has pretty much just been stuck within this range, going back and forth between the sellers and the buyers. So you can take just a rectangle, isolate that area. You can see that this is where the sellers have been selling, buyers stepping in down here, and there's no real clear direction of where price is going. We're not sure if price is going to break out to the upside or to the downside. So in the meanwhile, while price is still within this consolidated price range where the sellers are up here, the buyers are down here, it's going to be elevated risk. Another concept that I want to tie in is just I know a lot of traders have specific products that they like to trade. You know, some people might be all about oil or all about the Russell, and they have their picks that they like. But I beg to differ and say that it's more important to look for where the highest probability opportunities are. So again, going back to the S&P and the NASDAQ, we saw those in huge uptrends. So we'd be looking more for our buying opportunities. Russell going sideways. This is very choppy. This is not something I enjoy trading because it's going to be elevated risk. You see charts like this, S&P that are clearly having huge moves to the upside. We just want to stack the odds in our favor. And you know, this is what Jeff and I go into a lot more detail in our live trading rooms. We're having, as I mentioned, a couple courses coming out to start teaching you guys what to look for, the setups and the formations, so that you can get a clearer perspective of what we see and how we can find the best opportunities to trade. I see nat gas. Yes, I'm going to switch over to that one because that's actually a good one to look at as well. I mean, if that is, Scott, is that your favorite product? Because I don't mind this one. This one's actually a good one as far as huge moves. Hopefully you're at least buying one of them. Yeah, so we saw once price broke out of this range, this consolidated range, price just shot up. So hopefully you guys were taking that breakout. We could see just going down and to the left, price had been having this huge move to the upside, trending along with the indexes moving up, so looking to buy. Similar with nat gas, don't want to be picking tops right now, or you could get squeezed out. But seeing overall where the highest probability trading opportunities are is where Jeff and I can specialize and help you guys to see these more clearly and find where those unfilled orders are at and where the institutions are waiting and looking to have their unfilled orders being bought, where they're looking to buy, and where they're looking to sell. So nat gas, definitely a good one to be buying as the trend is going strong to the upside. Another good one to be trading right now. So those were the main stock or the futures markets that I'm looking at. Pretty much the indexes overall, just since S&P, NASDAQ moving to the upside. We'll see. I'm going to switch it over to Jeff and see what he's got. Probably a couple of other futures products we could take a look at. So I will give it back over to him. We'll see what Jeff's got in store for us.
Wow, a lot of market move this morning. The short traders are making the market go higher again. All right, so let me go ahead and share my screen. Host. Thanks, Daniel. All right, so, wow. Let me start from the top again. As Kaitlyn was pointing out earlier, it's not about the time frame, it's about the picture on the price chart. Okay, and as I'm drawing out this picture, this is one of my favorite type of structures to look at. And it doesn't matter the time frame, but the structure is important. That this little anomaly here, where we had that flat base and then a strong drop into the zone there, is that we have a 97% chance that we'll break above that pivot high. Okay. So in training the eyes and kind of looking at different pictures, different patterns on the price chart, we document these pictures and there's patterns and shapes over and over and over again. Okay, so we can stay on the right side of the chart. Okay. Now, as I was mentioning before, while I was muted, is that again, I have tick charts as well as time frames. Okay. Now, the tick charts allow me to see the market a little differently, okay? And a tick is not bound by time, it's bound by transactions, okay? Refresh that. So we have the availability to trade short-term time frames, longer-term, tick charts, volume-based charts, and we can see which markets may be trending. Get that right. And which ones are starting to get congested, okay? So the Dow is starting to show a little weakness and congestion as we see that the main trend on the Dow futures is now starting to show a little bit more bearish, okay? While the NASDAQ is still pushing higher and the S&P is starting to get a little weak, while the Russell is now starting to get congested. So a lot of little pieces of information to help us put some of the puzzle together. So as we're expecting price to break above the prior session's high, okay, we're now looking, where do we have demand? Where do we have our next trading opportunity? Well, we're not about picking tops. It's, for the most part, we're still inside the prior day's trading range on the S&P. Now, what we have to realize is that when we're inside the prior day's trading range, that often the gap fills the same trading day. Okay, where price comes back down to the origin of the gap. And by using that information, we can anticipate, well, price needs to pull back and fill the gap. And it's not a very big one at this point. So if the gap was much bigger, then we'd have a better opportunity to take the trade short. On the NQ is now coming right into that supply zone, and we're right at that top of the hour, okay? Now, using all the stocks as an odds enhancer, okay? Apple, Tesla, Microsoft, Google, Facebook. We're seeing some weakness on Microsoft and Facebook, but Amazon's still looking strong. And so as I'm anticipating taking this trade, I would certainly have to manage my risk. The stocks control where the equity index is going, okay? So as I'm monitoring the large market cap weighted stocks here, I am looking for some weakness. Now, I have it with Microsoft and Facebook. I'm just waiting for Amazon, waiting for Apple, waiting for Tesla and Google to show a little weakness as well, okay? So supply and demand is one technique. Trend following is also another, okay? There are going to be many different techniques that we expose as far as some of the large market timeframes, as we post out on Twitter, where we're using Fibonacci techniques to anticipate and forecast the next turning point and where the market may stall out, okay? S&P is still reaching into that forecasted area, 48,408, 44.29, which still aligns us with that small time frame, is to look for in that area for price to stall and go sideways a little bit, not necessarily look for a change in trend. Do not construe the forecast as a supply zone, but as a profit target area and where to anticipate price to change direction. Coming back over to the Dow's forecasted area, 35,147, 35,315, okay? With the first touch, okay, we took, Kaitlyn had this marked out in a very small time frame zone where price had dropped down into that area and bounced out of it, okay? Now remember, all those little tails like this, especially the long tails, point to the downside that the demand is a little bit lower. And when we get the tails to the upside, it's saying, hey, supply is up above, okay? Let's see, 1 second. I have a couple more charts here to share with you. One moment. Okay. So it's come back out here as we are watching the NASDAQ come into this zone, 15,114, 15,125. Tesla is still pushing higher and Apple has not started to drop. Same with Amazon. So taking a short trade off of here would be a little aggressive, a little more risk at this point. Always remember with futures that the stocks move first and the futures follow. Futures are a derivative instrument, okay? So we're looking for a little help from the equities over here to start pulling back before we jump on to that short trade. Now, in just a moment, I'm going to pass the mic back over to Kaitlyn, and she's going to go into another segment here. And I will be monitoring this. I'll keep my mic hot and live. So if we do see that opportunity where Tesla and Amazon start to show some weakness, I'll just make everybody aware of it, that it's now an opportunity to take the short trade on the NQ, okay? Let's bring up the Dow. Dow has been pretty quiet, still inside the prior day's trading range. Dow has not shown any weakness. As we take a picture of the Dow, we see the Dow is up 50 points. I have 1, 2, 3, 4, 5, 6 Dow stocks negative and 7 Dow stocks positive, okay? Now, when we talk about the cash value relative to the cash, which are the stocks relative to where the futures are trading, right now we're showing that we have one more positive Dow stock over 94 cents than we have negative, okay? So right now the Dow futures are oversold by approximately 70 points. How I calculate that, we'll go into a little bit more in depth tomorrow when I have a little more time to explain all that to you, okay? So last one, Russell. Russell also approaching supply zone up there about 22.32, 22.35. But also keep in mind, as I bring over the smaller, I'm looking at a share bar chart here, I'm still showing a lot of strength to the upside as far as our trend following, okay? Many different indicators, many different ways to look at trading these capital markets. Using supply and demand is one technique, and using trend following techniques such as a software like Entry Point to help us guide our way through these, okay? And we're still seeing that our charts are moving up, okay? All right. Natural gas, pulling back. Now, just 2 seconds here on natural gas. As we saw the little example I used on the last trade day, we are 2 days, natural crude oil just popped up into that supply. That is we're still right there on a bigger time frame, 72.27. But as we saw the last trade date, keep in mind that on the natural gas, the last trade date is on the 28th. So just prior to price dropping into that last trade date, and then from the last trade date, recovering and coming back up. I'm somewhat anticipating that on the NQ. All right, let me pass the mic back over to Ms. Kaitlyn, and she'll take it from here.
Thank you, Jeff. Let me share my screen again. So quick, before I get started, just looking at the time real quick, I do see that we have about 17 minutes left. So just want to leave part of this session open for anyone who has questions. I know we have a lot of new people in the room right now, as far as people that haven't been in our live trading sessions before. We've got that mix of people who've been with us before and some new people. So if you have any questions about the live trading room, the stock picks that Jeff is showing and that we're going over, feel free to type them in the chat. We're going to use this time more to answer some of your questions if you have any, and do some more trade recaps. So type them in the chat if you have anything. Just one that caught my eye. Any of you guys trade gold out there? This is one I've been actually keeping an eye on as far as looking for more of the selling opportunities on gold. Yes, Daniel, absolutely. I know Daniel does gold. Hanji, gold, yes. So gold is a great one. I was waiting for the supply zone actually, or this selling territory where you could see price popped into it. And then we're looking at an area where there's potentially an area where price has been used up. So I mentioned this before, where a lot of times we need to see where the institutions have already been filling their orders. So when price is dropping and their institutions are filling their buy orders, that's what causes price to move to the upside. The more times the institutions are filling their orders at a certain price point, the less likely there's going to be any remaining orders because they're getting them all filled up. So looking at gold, gold actually has a great picture of what to look for as far as understanding where potentially there's less unfilled orders and where the institutions might not be buying anything anymore. So looking here, you can see where we have this basing action where price had been dropping into this range approximately between 1800 and 1790, where the institutions have just been stepping in and buying up the gold futures right now. So several days where this has been happening, where price is coming in, and then as we can see, price rallies out of there. So we know because price leaves this area so strong that this is where the institutions are at buying up gold right now. So how do we use this to our advantage, and what does this mean, knowing that gold has been being bought up at this price point for several days? Well, as I mentioned before, the more times orders are being filled and all these points where the institutions are buying, less likely there's going to be any remaining orders at this point because they've already been filled up for the past few days. So at some point or another, the institutions might just take a step back. They had all their orders filled that they needed, and price could potentially move through. So this is an area where I was looking to take a selling opportunity, looking at this picture, seeing how institutions have been buying gold for a while. Potentially we could see price move down if they don't have any more orders out there to be buying gold. So looking at that and looking at this information is very important to understand where there's those potentials for breakout trades. So, you know, we have two different trading styles as far as looking to buy in demand, buy the dips, and there's also the more aggressive style of taking breakout trades. This is what I'm seeing here as far as understanding when to take the breakout trades, looking at where there's potentially all those orders being filled up, where we could have a strong move through it. That's what I'm anticipating on gold. So knowing that, was looking at a supply zone. As someone mentioned before, as far as the time frames, this one, I like to make it clear for students, especially if you're just starting out, as far as what I'm looking at. So I always mark my areas where I'm buying and selling with the time frames, just so I can go down and show you that exact picture of what I'm looking at. So I'll go down in this case and show you the 14-minute time frame that I was looking at for a selling opportunity. Also knowing that we're anticipating a lot of the buy orders to be used up already. So 14-minute time frame, as you can see here, As I mentioned before, time doesn't matter. It's all about finding where there's that imbalance of orders and where likely the institutions are waiting to either buy or sell. So what gravitated my eye towards this spot is seeing this strong move to the downside on gold, and price hadn't been up here yet. So that's two pieces of information right there where I'm seeing price had a strong drop, price hadn't been up to this point yet. So I was looking to possibly find some unfilled orders where the institutions were waiting here. So also knowing that we're looking for that breakout to the downside, just want to point that out. Price came up into this area where we had this strong move down, found where those sell orders were at from the institutions, just waiting as we expected, and then price is coming back down. So stacking the odds in your favor as far as understanding if we're anticipating the breakout, look to get into those trades at a point where if you're getting a breakout to the downside, we want to be looking for those sell opportunities. So here, anticipating the breakdown, price coming up into the supply zone, the selling territory, where we found some unfilled orders and price is coming back down. So another thing, just again, going back to the time frame, time doesn't matter, all about the picture. And that's why I liked starting on the higher time frame, just to see more clearly the big picture perspective of what the institutions are doing, since we want to be trading with the institutions and not against them. So seeing that the institutions were buying up here, but price had been coming down, making lower highs and lower lows, seeing more of that selling pressure coming in, wanted to jump in as well with the institutions as they're selling, price coming down, and looking for that breakout to the downside. So here, hit that 14-minute supply zone, that selling territory, and then looking for potentially a breakdown to the downside. So I know Jeff recapped the indexes. I'll switch it back over to him if we want to look at anything else. And then we'll probably wrap it up for today. Just want to let you guys know today was, again, more that introductory period of getting to know us. If you're new in the room right now, it's nice to meet you all, and thank you again for being here. You guys will continue to get picks tomorrow and Wednesday from us, and we're going to be going into more details as far as what we look at, what we do, the different products and courses we offer, so you guys can get a more and a better feel of what we have to provide to help you guys to see these areas where we can find those high probability trading opportunities. Oh, and I see real quick, Daniel mentioned about Discord. So great point. And I do want to mention that we do offer, if you guys know Discord, it's a community where all traders can come together and share trading ideas. Traders can help other traders. That we're going to be rolling out probably next week. So if you do sign up for our live trading sessions starting August 1st, that's something you get access to. It's great just to build that community and build each other up as we're all trying to get to the same goals of finding these areas where we can buy and sell and just keep getting better and better. So thank you for mentioning that, Daniel. I'll pass it back over to Jeff since we've got 10 minutes left, and we'll kind of wrap things up now. Thank you, guys.
All right, let's see. I think we got the mute thing working good, and just need to switch back over to host. I'm the host now. Let's go ahead and share the screen. Which screen am I sharing here? Let's go to screen number 2. All right. Yeah, a lot of things we have coming out. Now, tomorrow's going to be a lot more active. We wanted to do today as more of an introductory, just to get to know me, get to know Kaitlyn, and kind of show you a little nuggets of what we're doing, okay? Now, as I'm going to take a quick moment to review a few things, and as Kaitlyn mentioned, you will be getting the stock picks that we will be publishing over the next couple of days. So about 30 minutes prior to our session starting, look for a PDF or an email or an email with a PDF on it that you can kind of look through and see the setups and see what we're looking at for the morning session there. Okay. Yeah, tomorrow we have to make a few modifications as far as what we have to manage our Zoom account, but we'll get that underway. Not a big deal. As far as the S&P, we're still kind of hanging out. Looking at all the charts together, we can see that the S&P and the Dow are starting to get a little more congestion as we're using entry point for that guide right there. And as we're seeing on the NASDAQ, it is really congested right now. And when we see the main trend and we don't see all level 5 or all level 4, or sorry, level 5 red or level 5 blue, the trend following is kind of off the table, okay? And we start to see the markets getting a little bit congested. The other thing that I'll point out here is that we are expecting the natural gas to pull back to about the 28th, okay, which is our last trade day. A lot more on that tomorrow as we talk about some of the different strategies and things like that we will be doing going forward. Some of our subscriptions, information that we have out there, if you want to keep going forward with Kaitlyn and I, our live trading rooms, we have, it's just a small fee, about $150 a month, okay? And it comes out to about $12.50 a day for being in a good environment and working with educated traders, okay? As many people that do know me, you know, I'm all about traders helping traders, and I'm just one of those. I'm not above or below anybody. I'm just a trader out there helping others. So we're not trying to overprice anything. I think everything that we put out there is very fair and should be able to make up that subscription in just 1 or 2 trades, okay? A couple of the other things that we have going on now is the stock picks. Okay, the stocks picks is also a subscription, and if you have the PDF of the file that Kaitlyn sent out earlier, all you have to do is click on the link if you want to subscribe to those. Okay. Now, going forward, there will be some additional courses that we will be putting out there. Now, these are small online courses at the moment. We don't have anything heavy weighted. We have other places that we where people can learn a lot of the basics, okay? Our pre-market routine course, okay, is about a 3-hour course where Kaitlyn has scheduled from on August 12th from 8 a.m. to 11 a.m. Eastern time. And it goes over all the details that she looks at in the pre-market. And we break each part down so everybody gets a thorough understanding of what information they're collecting to understand the trading environment before they jump into it, okay? And you can pre-register for this, and the course costs $300, okay? There will also be a course where I'm gonna talk about the leg-based group of candles, okay? Now this is a very shortened piece of information. It's not going into a great detail, okay? The leg-based group of candles is what we use when I'm using the active income type trading. Now the active income, we get into a tick chart, and on the tick chart, you will start to see that we will train the eyes and find a lot of these little trade setups. Now the blue dots you see only represent a base candle where the body is less than 50% of the range, okay? And we set up some of these short-term trades where we can get some active income. Each trade looking for about 5 to 10 ticks, depending on the product, okay? After you complete the leg-based course, then we have the active income course, which will go into teaching you how to take small profits from the market, but do it 2 or 3 times a day, okay? Most of the trades will last just a few seconds. None last more than a minute or 2. But hey, you can grab anywhere from 50 to $100 on a short-term little trade. Often it happens so fast, you can complete these trades, and then be on with your day. The last part that we offer is one-on-one private tutoring. Now, the private tutoring right now will be done with Miss Kaitlyn. These will be 5 90-minute private tutoring sessions. The first session is, and first consultation would be to kind of get a feel of what you're looking for and where you're going and help you put these things together. So you got 5 90-minute sessions, and that price there is $12.95 for that private tutoring. Okay, now that's all between you and Kaitlyn and how you guys put that together, and also the training will be done specifically by her. Now, I'm going to take one more look at the equity markets, the equity indexes, and see where we're at, what we're doing, and then we'll wrap up our session. Let me, one moment here. And okay, I think do you have anything you'd like to add, Kaitlyn? I think I unmuted you. There you go.
Yeah, good job. I think that's about it. Just want to emphasize that, as Jeff mentioned, this was just more of that introductory phase of getting to know us, and going to go into a lot more detail tomorrow. I know I just kind of hit the surface of as far as the pre-market routine, a lot of good nuggets and information I want to share with you guys that you can then start to incorporate into your pre-market routines. Because again, very important to have one just before you start with your trades and just start placing them. You want to have a routine in place of knowing what to look for beforehand as you prep for the day. So we'll go over more zones tomorrow, pre-market routine, and a lot more active trading tomorrow and Wednesday. So looking forward to that. A lot more in store that we have to share with you guys. I just want to say thank you all for coming in. It's been a pleasure, and we'll see you all tomorrow with updated links. If you didn't get the stock picks, send us an email at traintheeyes@gmail.com, and we'll send it to you in case some of you guys didn't get it. I think that's it. Jeff, you got anything else?
Nope. I think the market kind of helped us out today, that there wasn't a lot of great little trades, so we could do our introduction. So I'm happy for that. And I do want to thank everybody for coming in. This has been a great opportunity for us to share a little bit of what we do each morning. And we hope that you come back and join us on tomorrow and Wednesday, but come back prepared just to hit the ground running. Also look in your mailbox or your email box about 30 minutes prior to start time for the picks that we're looking at to share with you. And we'll have a lot of active income and regular trades set up, and we'll be going through the pre-market routine, and then we'll get into live trading. We'll be very active tomorrow, so hope you come and join us. Thanks again for joining us today. Thank you, Miss Kaitlyn. Great job, always. And I'm so excited to introduce you to everybody as well. Everybody have a great trading day.
Bye, everyone. Thank you.